Wall Street is selling to the Main Street once again, and this time around, I suspect there will be a 5 to 8% pullback by the end of November 2025. Now, once again, the market has been going up. Everyone around me are calling for the best buy, must buy situation. And when we see the numbers, we know that it's just a matter of time. So before that result, disclaimer apply as usual. There will be more than 10 over charts to show to you or economic data. So please stay tuned. Yeah. All right, first of all, Leon Cooperman. Now, he says that we have reached a stage of the bull market that Warren Buffett has warned about. Now, we all know that long-time investor Leon, he has always been a big advocate on the buy side. So for him to say this is actually a very good warning. As a matter of fact, we all know that Warren Buffett has stopped buying shares. Of course, he bought recently OXY CAM, but that is because he had bought a lot of OXY. So in this theory itself, right, we are now potentially facing the irrational exuberance that what everybody can see but refuse to accept. And that's something that we need to understand. And of course, guys, if you know this right now, the Buffett Indicator, the historical chart is now at the historical high that never ever seen before at 221.2%. This is a level that never have seen before. And of course, the last time we see something like this, it was back in the 2022 period where the market came down more than 15 to 25%. And of course, the one that was a staggering one was back in 1999 during the NASDAQ bubble, where the market came down for the NASDAQ more than 50%. So of course, we all know that, people say that this is going to be different. The market has changes, now it's AI. I don't buy this. In fact, itself, I think that we are going to hit ourselves right in the nail very soon. Now, Paul Tudor Jones, we all know that he is a very good hedge fund manager who has been spectacular in his heydays, whereby even now that he basically predicted the stock market crash in 1987, just weeks before it happened. So now Paul Tudor Jones says that the ingredients are in place for a massive rally before a blow-off top to the bull market. Now, he says that everything now basically is reminiscence to the 1999 NASDAQ crisis, but he also mentioned that, right, there's still got some space for further upside. So, okay, so that is what he says, and I think they're probably pretty in line because I also feel that there will be a little bit more before the market blow. Because now there are people saying this. Now, compared to Cisco back then, it was a bubble because the price was very high compared to the earnings. So I can understand that. So the price was here, the earnings were here. So you call for a bubble is expected. But you put it in comparison to the NVIDIA right now, where the stock price is here and the earnings is here. So it's not as the same as Cisco. But that's why the reason why I say it won't be a crash. But I believe there will be a pullback about 5 to 8%. Okay, that's my personal take. That should be happening in the near term. So it won't be a crash, guys, because the earnings are coming together with the price action. But a pullback is essential. So you look back in the Dow Jones back in the in 2024, when the price goes too far away from the 100-day moving average, usually it will pull back and come near to it or go below it. Yeah, it happened again over here, but this has already happened before. Now, back then in 2025 December period, I remember the bull was at 42,000, went all the way to 45,000. Now, many people at that time itself was telling me, Cal, there's no way the bull will come down. But I mentioned to them that the current bull versus the moving average is very far away. Hence, therefore, I believe that there will be a pullback pretty soon. And truth be told, the market just came down all the way and touches the moving average. And again, after that, it rebounded. So when that happened, I will let you know, guys, what to do. Yeah. Okay. So now where are we right now? We are now at this point. We have the furthest divergence at the moment right now. And you look carefully between what happened back in the November period, you can see that we are almost having the same identical sideways. And of course, the RSI or the Williams indicator, we're having that. There is a bit of divergence at the moment now where the indicator is coming down while the price is going up. So this is a negative divergence. So guys, I am very confident to believe that there will be a pullback to 44,500 in the near term. All right. Today we are at 46,700 level. So that means that there will be a pullback and that will be about 2,200 points. So to remember this number, we'll come back to revisit this a lot later. Yeah. Okay. So this is the first chart I have for you for now. Now let's take a look at this. This is the NAIM. Now we all know that this is all the active managers. But interestingly, now apparently they are cutting down size. Okay. We have seen that before back in early 25, whereby they cut their positions. while the S&P was going up, and then the S&P later on dropped by quite a fair bit more than 12%. So will this be happening? I think it will, because now it's much higher, and a lot of people have already hit the target of 6,500 to 6,800 level. So I think that this time now, this kind of negative divergence will come in, and it will pull the market very, very shortly. Now, one thing is that we all know the reason why the market is buoyant, because the dollar has came down. But if you look at the dollars for the last 14 years, since 2011 until now, every time when it comes to this particular support level, it seems to have a strong rebound. So that is the reason why I kind of feel that the upside for gold may hit a stop for time being. Now, why would the US dollar go up with the Federal Reserve cutting rates and stuff like that? Well, I'm not too sure. I'm a chartist myself, so I can see that maybe there will be some reason again coming up to support the dollar unless they want to crack it down. But one thing to note is that the Dow Jones to gold ratio had just crossed critical 12 once again. And this is something very scary, because the last time we saw this was in 1929, the first time we saw it, in fact, sorry. And then we know that the market crashed and then the Great Depression. In 1973, the similar thing happened, and we know that the stock market sold down more than 20% between 1973 to 1974. And of course, during the Lehman Brothers time, it happened again. And of course, the market came down more than 30%. So the question is, right now, we are having the same thing happening. Yeah, broke below the critical 12. And of course, it happens in this 3 period. And we all know the market dropped by more than 15 to 25 to as high as 35%. So all this tells me that we have to be very careful, because you don't want to put yourself in this position. As a matter of fact, the office CMBS delinquency rate has hit a new high level. Now, this is not just a cyclical blip. In fact, it's a systematic consequences of work from home and causing a lot of this cheap. I mean, it basically created this office to have delinquency. People not going to pay for that. Now, they're hoping for a soft landing, but we all know that it's going to be a hard landing. And look at the unrealized losses on the investment securities by the bank. The banks are now sitting on $395 billion of unrealized losses as in second quarter of 2025. And that's the reason why the banks are giving a lot of pressure to Donald Trump to cut interest rate, because it's going to kill them. So as a matter of fact, right now, if you look carefully, this is a very important chart. This is the LEI versus S&P 500. Now you can see that whenever the LEI, which is the leading economic indicator, when it's actually pulling back, okay, you can see that the S&P 500 will really, really sell down. So now the thing is this, the LEI has been going down for quite a while, in fact, but the market will continue to go higher, and this is a big, big issue now, and I suspect that this is going to be a very big problem coming up in the near term, right? So traders, you need to watch out for this. And of course, why I say the Main Street is selling to the Wall Street is selling to the Main Street, because we can see right now the institutional, the fund managers, they are actually dumping their shares, while the retailers are the net buyers. So of course, we know that the net buyers was mentioned to be the retail about 2 months ago, then they are cashing in, making money. But there's always a big issue is that when the retailers are making money, they're plumbing more money itself. That gives the perfect reason for the Wall Street, the institutional, the hedge funds to sell to them. So now the thing is this, we all know that when retail are buying or the smart money are selling, usually it will turn negative. So now everybody look at it, this is really incredible. The institutionals have been selling a lot in the market. And this is where it gets very scary, because this is actually the last time the 3 months realized volume was so low was January in 2020. So what happened is that when the realized volumes have to go at a very low rate, that is usually the point the market will tip. Now, it may not happen immediately. Sometimes it does, sometimes it doesn't. But the point is this, regardless of sell, guys, we are really near a top of the market. So we've now at this junction here itself, I really believe that there will be a significant pullback in the market of 5 to 8% pullback. Now, I can't give you an exact date, but I'm pretty sure that we are very, very close to it, and we're preparing for that on our side. All right, guys, and most important things now, the Warren Buffett indicator is screaming like very loud. At the moment now, we are at the 2 standard deviation above historical trend. It's like basically a full-blown potential bear market coming in, and it's going to be a major correction, because we've seen it before. When this happened, when the market is at actually the second standard deviation, we do see a significant pullback. All right. So we don't want to get involved at this point right now to be the wrong side. As you can see now, the AI bubble is about 17 times the size of the dot-com frenzy. Now, this is actually calculated by some analysis, and in fact, it's feel that now the subprime bubble is nothing to it right now because we are 4 times bigger than the subprime bubble. And the Shiller CAPE index, oh my goodness, we are at the 40.08 level. We're just basically very shy away from what happened in NASDAQ in 1999. Now, the mean is 17.1, then 17.5, and we are 40.08. Now we're talking about with more than 200%. So guys, this is not good kidding. You cannot be telling me that you don't care about it because you don't want to be caught. Now, if you look at the chart pattern itself, right, based on our crazy 5% rule, if the Dow Jones were to come down, there's a very good chance the Dow will come down to 44,710. Now, this is actually very similar to the figure I said earlier itself. If you remember this, about 44,500. So the 5% pullback is somewhere around here, and I think it will happen. So there's a lot of money to be made. If you do it properly itself, there's a lot of money to be made. Yeah. So traders consider doing that. The next thing is this. This is the BNB, my crazy BNB target for big movement bar. Now we have seen a very strong resistance over here, 47,024. That was already calculated by my system. So now you can see it's trying to hold at 46,538. Now this level is trying to hold at it's trying to hold it up. You can see that. But if the market ever close below 46,538, then there will be a first selling wave to 46,051 level. And if the market can hold it, that may show a rebound like we've seen before. But if the market fail and continue to go down, then the market may see 45,550 zone, which is also very near to the target I just said earlier itself. So guys, these are all a very important number. Please take note, take it down, because things can really happen the next 3 to 4 weeks from now till November. And of course, very important, before we wrap it up, our KSI indicator, our big boys indicator, has turned red. So based on what I'm seeing right now for today, there is a high chance the Dow Jones will tap the intra-day support at 46,348. Then after that, we'll monitor this closely. 45,962 and 45,481 are the next 2 technical points based on my chart itself. So the few numbers that I went through today, take those down and you probably know what to do. But of course, again, if the market really want to goes up, that means that you can sell at a better level. Don't think that it's time to buy. It's really time to sell. All right, hope you guys enjoyed the video. This is Cal signing off. Take care and have a good time in the market. Cheers, guys.